Now, without further delay, let's begin today's event, sponsored by CoStar and hosted by Accounting Today. I'd like to introduce your moderator for today, and that is Jim Erickson. Jim, you have the floor.
Thanks very much, Adam. Hello. Welcome, everybody, to our session today, ASC 842, New Lease Accounting, Project Failures and Lessons Learned. I think we have an informative and interesting presentation today. Project Management Accounting Policy Software Product Insights gained from hundreds of successful lease accounting compliance projects with Matt Waters, who I'll introduce in just a second. Want to remind everybody here today that you were able to offer a CPE continuing education credit for this. It is imperative that you adhere to answering 3 of the poll questions that you will be presented with today, and also stay for the entire presentation in order to receive that credit. So you can glance through this, but the main points are that you answer 3 of the polling questions and stick around with us, which I'm sure you'll find worthwhile because it's going to be a very informative session today. My name's Jim Erickson. I'm editor emeritus at Source Media and the founder of Information Management Magazine. And the speaker today that you're going to hear from is Matt Waters, is a former lease accounting manager with Home Depot, American Tower. He is CoStar's subject matter expert with more than 15 years of management experience in accounting and finance. As Adam told you, we're going to be recording this session for you today. We'll send you a playback of it as soon as it's available, and I'll be jumping back in for the polls and at the very end. But in the meantime, I'd like to introduce Matt Waters, MBA, CPA, Director of Lease Accounting at CoStar. So, Matt, why don't you get us going today?
All right. Thank you, Jim. This is Matt, and I'm happy to be here today. I'll just kick off with a brief story. I think like many people on the phone, I took the CPA exam a while back, and I remember actually studying the lease accounting section. And the reason why it was so memorable is because it involved those 4 bright lines tests that we became familiar with under ASC 840 or FAS 13 as it was known back then. And it was something that was kind of easy to memorize. You know, there's really no judgment involved or interpretation. They were called bright lines tests for a reason. So I memorized that and took the CPA exam and figured I would promptly forget about lease accounting and never use it again. Kind of like pension accounting. It was another one I remember thinking that about. But I guess the joke's on me. Lease accounting turned into a career path. It really started back in 2005. I took a job at American Tower, which is a big cell phone tower company with hundreds of thousands of leases. And my first week on the job, actually, they told me to go to Boston. That's where they were headquartered, and said, Matt, go to Boston. We got you an office up there right next to the lease library, and just analyze a stack of leases. I got there, and there was a 4-foot stack of leases on a desk, and I analyzed those for operating versus capital treatment, and ultimately used that to support our audit. So that kicked off an experience in lease accounting that's lasted all these years. I moved to Home Depot, where I led the lease accounting department and prepared for the changes that we're now working very hard on. And then from there, eventually I moved to Home Depot, to CoStar. And CoStar has helped hundreds of clients prepare for the new standards. So again, thank you, and I'm happy to be here today. And what we're going to talk about are lessons learned, because public companies had a deadline that has already passed, and so many have reported at least 1 quarter of earnings and disclosed lease information related to the new guidelines under ASC 842. And so we've learned a lot during that process. And really the process has remained largely the same. But now we're in a situation where we have some companies that have not yet transitioned, so maybe public companies that are on a fiscal calendar or private companies. And so it's useful to talk about some of these lessons and what what we know now, talk about some of the more common issues and challenges, and just offer some advice and best practices that we've picked up along the way. I'm going to talk about three main categories, and those are project management, accounting policy, and also software product essentials. And this is really going to be useful for two main groups. Those companies that are not required to comply just yet, but the deadline is looming. And then also, unfortunately, enterprise organizations that have already experienced some form of project failure, and they now need to pivot to a better path. We've seen this at CoStar. We've had some clients come on board recently who are already replacing a lease accounting software solution that was perhaps not as robust as they thought it would be. And so we're coming alongside them now and helping them replace that system. So, that's unfortunate for those companies, but then again, it's encouraging for us at CoStar. We've had hundreds of successful implementations and 100% success rate so far in getting clients across the finish line. Matter of fact, I had lunch the other day with a really large publicly traded company in Atlanta, and they said they were actually shocked at how easy it was to produce the disclosures needed for ASC 842, and they were actually anticipating a little bit heavier of a lift when it came time to report earnings. So that was really encouraging news to hear. And Jim, I think that brings up our first polling question.
Sure, Matt, thanks. And this is, like Matt said, the first of four questions here today. You want to answer three of these for the continuing credit. Please select one of the answers from the following choices and hit the submit button. So which of the following best describes your company and status for ASC 842 lease accounting transition? Is it private company working on transition, public company with late reporting and working on transition, public company already transitioned successfully, or public company that should be transitioned but project experience failure or having trouble finishing with the transition? So go ahead and select one of those, hit the submit button. I'll give you a few more seconds to do that, and then we'll show the results. And again, remind you that we're going to have a little Q&A at the end with Matt, hopefully, as time allows. And so it looks like we're clicking around here. So I'm going to go ahead and show this one more time. Whoever's moving the slides in the background might want to leave that alone. And so select one of these, hit the submit button, and I'm going to close the poll and show the results. You might have to, in fact, I'm going to give you another 10 seconds to resubmit in case we just canceled that. So I'm going to let you resubmit and hit that submit button. And here are the results. Okay, private company working on transition. Matt, how does that relate to your experience with this timing on this transition?
Yeah, thank you, Jim. That's great. This is exactly the audience that we were anticipating today. Because the deadline is approaching for private companies, and again, it's nice to see that only 2.4% of our group today have experienced some kind of trouble or even failure, and hopefully the information we present today will keep the rest of the audience out of that position.
Great. Okay. Let's keep going.
All right. We've had some conversations recently with some experts in the industry, and it's astonishing that they're saying that up to 25% of lease accounting projects are failing, and that is unfortunate. And again, it just really, I think, relates to some of the taking for granted maybe some functionality that was promised as a part of software solution, maybe they weren't fully baked in the sales cycle, but promises were made. And then when it came down to it, we couldn't get across the finish line with some solutions. But again, we're here to help with that, and CoStar has been able to be successful 100%. One of the first area that I mentioned we're going to talk about today is project management, and there are really a lot of areas that the project manager or the PMO at a company should focus on during this process. A few we're going to focus on today are collecting lease data, communicating with a diverse group of stakeholders, selecting software, and ensuring resources are available for the duration of the project. And really something that I'll touch on probably a few times is this last point, that it's not just a one-time event. Okay, it is a very important one-time compliance event. However, leasing has been around for a long time. You know, I mentioned I've been working in lease accounting since '05, and now we've just increased the complexity of lease accounting. Leasing is continuing to be a valuable process and helps streamline organizations' use of assets. So it's important to think about using leases on a go-forward basis and how your accounting practices will support that, and ultimately set up your team for success for years into the future. So data collection is something that I hear about frequently, and actually this is one that comes up both from clients and even accounting experts and consultants that have worked on transitions. They unanimously pretty much say the biggest issue and the biggest surprise has been data collection, just the sheer volume of data that's related to lease accounting compliance. And this is largely due to equipment leases, being just managed out in the field, or in maybe the location level or the division level at many corporations, not centrally managed. Now it makes a lot of sense, and you could argue it's even required that the leases be centrally managed, or at the very least accounted for centrally on the balance sheet. So we see this data collection process becoming a big issue and a big time drain. And I've put on the screen here a few sources that you could consider in looking for lease data in the legacy real estate system, maybe SharePoint sites, fixed asset records. I won't drain the whole slide, but just point out that there are multiple sources that you can use to figure out where your leases are. And I think the most interesting one, and we hear this time and time again, is people are pulling lease documents out of their file cabinets and desk drawers all across the world, and in many cases that's the only place that the record exists. And then, maybe you could find it through some old-fashioned P&L analysis, but it's just been quite a task to find all the data associated with lease accounting. Now that list, and then this next list that I'm going to present, all of these are available from CoStar. You can download a white paper off our website for free, and I'll give you a link to that later in the presentation. But I just like to provide lists like this because I think it just really helps think through where to find things, and perhaps even if you are far along in the process, it may help you to go back and just think about if everything's been accounted for. Again, some of these are examples of embedded leases. And embedded lease has kind of been a buzzword, I'd say, and it really relates to service contracts mostly. And so you can think of that in terms of an IT service contract or or even a real simple example of an embedded lease would be an alarm service. So let's say you have an alarm system in your building, and you pay a monthly monitoring fee generally. And a lot of times you see sensors and keypads and things like that included with the monitoring fee, no additional charge. However, those pieces of equipment are attached to your building, and that is most likely an example of an embedded lease, and be something at least to look at pretty closely. And then from a more complex standpoint, we see this occurring with servers, with fiber optic cables, and IT equipment quite frequently, just because a lot of times you have a contract for bandwidth or server space or something like that. Sometimes there's dedicated equipment that can be identified, and so it's important to watch out for those embedded leases. The next aspect of project management that I'd like to discuss is this cross-functional group of stakeholders. What we experienced at Home Depot when we were getting ready for this transition is that there are really so many people that needed to be involved from the very beginning, and you can see a list presented here. You know, the obvious departments were accounting, because it is an accounting change, and real estate and lease administration. But then some of the others, like tax or legal, even procurement, and the others you see listed here, some of those were not immediately obvious, but what we realized was that it was important to get these people all involved from the very beginning. Now, they had varying levels of involvement throughout the entire project, but we decided it was really important to inform them up front and really obtain their buy-in, let them know that we're not taking away control, particularly for some of the people that were used to executing lease agreements and then just having it run through the P&L every month. We weren't taking over control or eliminating their ability to exercise their function. Ultimately, we were complying with accounting guidelines and ultimately giving them more visibility into how we were using leases, which really picks up some efficiency for everybody. Now, software selection has been a key consideration for most companies. If you have more than just a handful of leases, you probably need to consider a software solution. And CoStar has emerged as the leading solution in that regard. Matter of fact, when I worked at Home Depot, even during the exposure draft phase, when we were getting ready for this, before the final standards were issued, CoStar had a solution that could predict the impact to the balance sheet, and they continued to develop that over the years through the various iterations of the exposure draft, and then up until the final standard was issued in early 2016. So evaluating the solution then and deciding that CoStar would be my system of choice for lease accounting at Home Depot really is what motivated me to come and work with CoStar and our clients when the standard was issued. And so I'd say one of the biggest pieces of advice I could offer here is, as you're evaluating software, make sure you understand completely the current functionality. Ask for a live demo in the system. Make sure you're not just viewing a recording or PowerPoint presentation, and even ask for a sandbox. I know at CoStar we will give clients or prospective clients access to a sandbox environment, and you can get in there and use your own data to prove out the results. You can see again here. There's another list of items to consider. I think the some of these we'll talk about in greater detail later today. Another aspect to consider for project management is the HR impact. This is really a pretty complex change. FASB issued ASC 842, which I think is about 300 or 400 pages long, and depending on if you include the basis for conclusions and the other material they provide, it may be longer than that. And then the big four accounting firms and the other leading accounting firms and resources out there have published guides that range upwards of 700 pages long each, and they all have some things in common and some examples you can only find in one of the big four guides. So the point is, this is complex. You will need expertise either in-house or you will need to bring in an outside resource. And at CoStar, we have several firms that we work with that can come alongside and help you with that. Jim, that brings up our next polling question.
Right, Matt, thanks. Okay, here's your next question, folks. What aspect of lease accounting compliance are you most concerned with? So speaking for you, maybe your firm also, gathering all the leases and finding all the embedded leases, finding the embedded leases, gathering leases, finding embedded leases, or proper separation of lease and non-lease components? Is it inaccurate key assumptions and variables, or something else we haven't touched on today? And that's kind of a reminder, too. You can toss questions at Matt in the Q&A panel at the bottom of the screen here if there's something here we don't cover or that we're going through a lot. So go ahead and pick one of those, please. Hit the submit button. And remember to also ask your questions for Matt for any time left at the end, and anything we don't get to today, we'll be sure to follow up with you with. So I'm going to let you hit that submit button. I'm going to close the poll in about 5 seconds here. And okay, let's go ahead and show those results. Okay, kind of a mix here, Matt. Looks like gathering leases, you were talking about all those embedded leases you got to look out for. Does this sort of comport with your experience?
Yeah, that's great. I think that's also encouraging to see that many people are starting and focused on gathering the lease data. Again, that's the biggest time drain that we've seen. The proper separation of lease and non-lease components, it's also great to see that people are focused on that, because that's really been something that's taken some time from a policy decision standpoint. So companies really need to take to allow some time up front to set policy decisions, even before, if you're selecting software, even before the final decision is made on software, you can already be setting policy decisions on the practical expedients that you want to use under the standard, and things like this, the lease versus non-lease components, become very important as you move forward. And moving on to accounting policy. So accounting policy, we can see here that there's some nuances in transition accounting. There's complexities around ongoing compliance, and there's also some foreign currency considerations for some companies. And we'll dive in a little bit on each of those. But again, this is just a reminder that the standard can be pretty complex, and it's just important to have a subject matter expert or a team that you can rely on as you get ready for this. The transition accounting, really there are so many things that you have to consider during transition. I think one of the biggest that comes up is this example that I have here. Does the opening right of use asset always equal the opening lease liability? And I think just by nature, as accountants, through our training experience, we want that to be the case. We want we want to have a debit to equal the credit in the opening entry, asset equal liability, and that's it with a 2-line journal entry. Unfortunately, the way the mechanics worked out, FASB retained some aspects of ASC 840, specifically straight-line expense treatment. And so under ASC 840, we had the deferred rent balance, which was the mechanism that allowed straight-lining of rent payments into rent expense. And so we're sitting at the end of ASC 840 with this deferred rent balance, and the standard dictates that deferred rent balance that's on the balance sheet under old guidance becomes a right-of-use asset adjustment on the first day of the new guidance, or the ASC 842 transition. So right off the bat, your asset and your liability do not equal, although you do have a balanced journal entry, which I know helps us all sleep better at night. But this is one that's key to understand for transition. Something that we've automated in CoStar's solution, and this is also something that comes into play after transition. There are many circumstances that require the adjustment of the opening right-of-use asset, even for a new lease that will occur in the future. Examples of that are maybe tenant improvement allowances that are received up front, or direct costs that are paid up front, things like commissions. So all opportunities to use this opening balance adjustment feature, and I really point this out in the presentation on project failures, because this is something that we have heard from the industry. Not all software solutions offer this functionality, and it's something that is really critical. And I think you could even argue that you need it to be in compliance with the modified retrospective transition approach that's required by FASB. Now, the ongoing accounting compliance, as I mentioned, is kind of sometimes taking a back seat, or it's not thought about right up front because it is such a complex transition event. However, really, the go-forward value associated with this is huge, and we think it will quickly outweigh the one-time compliance event. And some of the things that we've seen become useful already with our clients that transitioned earlier this year are functionality and policies around lease renewals, terminations, partial terminations, impairments, changing assessments around what is reasonably certain. If you have any dual reporting, so if you're international and you need to comply with IFRS as well, there's remeasurement functionality around CPI or other index-driven changes. Sometimes data corrections are needed, and really any other type of lease modifications that occur. And one other thing to consider, even many companies have currency considerations. I'd say many more companies have the potential to expand internationally in the future. And so if you do have that potential, or you're in that position now, make sure that anything that you evaluate from a policy or system solution standpoint includes currency functionality. And I bring this up because there is a very specific rule in ASC 842 related to currency, and it's specific to leasing. It involves the functional currency and converting that at the historic rate from lease inception. And now, while the ERP system that you use many times will already have the rates needed for month-end rates, monthly average rates, this rate that's needed for leasing when functional currency and local to functional currency is involved, the functional currency rate from historic lease inception is not usually readily available in the ERP system, and certainly not tracked in a way that makes it easily obtainable and used for calculations on the lease level. So you need to make sure that any solution you choose, and go ahead and start thinking about how journal entries are impacted by this. Make sure that you have that functional currency consideration in mind. And Jim, that's our next polling question.
You bet, Matt. Okay, here's your third polling question for today. What is your company's current status for selecting a software system to manage data and perform ASC 842 accounting calculations? So your choices are, well, we have a proven system already up and running. We've identified some options and are evaluating them. We're interested in finding options to review, or we believe our Excel spreadsheets will do fine for our needs. So please choose one of these 4 options and hit the submit button. Once again, while you're doing that, I'll remind you, you can ask questions to Matt for any time he has left at the end of today's presentation, and he'll be happy to answer them. If we don't get to him today, he'll follow up with you. So I'll give you a few more seconds, and I'll close that. Okay, I'm going to go ahead and close the poll here. And, okay, Matt. So, well, I guess I'm not surprised. Looks like almost half the people are still using Excel.
Right.
That's not news there, I guess, but what's your take on that?
Yeah, I think Excel is great. I think I'm like most accountants, and I use Excel every day, and love my pivot tables and VLOOKUPs and all that kind of stuff. I think what we are finding with lease accounting is that while it is possible to complete the requirements for a new lease accounting in Excel, it's not ideal. But again, only if you're a company with more than a few leases. If I were sitting with 5 leases, yes, I would hammer that out in Excel, no problem. But once you get, there's some magic number. It'll be different for each company based on the complexity and the materiality involved. But there's some number, probably at least over 100 or a couple hundred leases, where Excel really becomes a challenge. And I've seen this over the course of my career. You can get really fancy, and some accountants like to geek out in Excel, right? You get you're really fancy with macros, and you have somebody that just takes this on and runs with it, and then problem is when that person leaves the company or maybe gets a promotion, goes to another department, the people that are left don't know exactly how it was designed or exactly how the macros were written.
Right.
And sometimes you can get out of sync with using Excel and counting on that for your financial reporting.
Yeah, people are set with their ways, and I mean, do you find, when you try something different, it's often a new experience. Well, that is a lot better, but do you find the benefits a lot of times is it resources, is it time, is it auditing, is it, what usually moves people off Excel in your experience?
Oh yeah, I think it's all the aspects that you just mentioned. The audit trail is certainly a key item. If you're using the CoStar lease accounting solution, you can even give your auditors. We have some clients give their auditors a read-only access. So it really saves time during the audit, and provides really solid assurance to the auditors that they're seeing accurate information, can tie it out all the way through. So that's the time and the audit aspects are really important, and then just the consistency of knowing that you have a system of record or a subledger, if you will, that's solid, that you can count on, regardless of the any kind of turnover that you experience in the accounting group.
Yeah, fair enough.
So moving on into software product essentials. So, we've mentioned already the calculations have become more complex and nuanced, and there's certainly going to be more auditor scrutiny upcoming. I mean, this has been a high-profile event, been talked about at CPE events for at least a decade now, I think. I mean, we've been talking about this for so long that auditors are really familiar with the changes, and they're certainly going to be scrutinizing the books carefully with the new impact to the balance sheet. So we've seen that leading companies are really making an investment in a true enterprise class lease accounting software, and I'll just run through some characteristics that are essential there. The first thing I think is a stable structure. So as you can imagine, with such a well-publicized and complex change, no secret that a lot of companies were going to move off of Excel and into some type of solution. We've seen a wave of upstart vendors in the marketplace, and so they've popped up in the last couple of years, but unfortunately some of the solutions offered and sold were not fully baked, and that's what I mentioned earlier. We've started to replace some of those systems, and so it's just kind of a caution here. Just beware. Make sure you understand the backing behind the software company, the experience they have. Make sure that you're investing in a product that has a large company behind it, a strong balance sheet on the software side too, just to make sure you have a partner that's going to be with you for the long run. Another, I think, key source of information and credibility can come from your auditor or your trusted advisor. A lot of times, because of independence, we use one firm to audit, and another firm is our go-to for consulting activity. But be sure you check with your consultants, your auditors, and see their perception of the lease accounting software market. In many cases, I know at CoStar we have several alliances and partnerships with accounting firms, the Big Four firms, and then several other top-tier accounting firms we work with every day, and they have walked along this path with dozens of clients each, and are really familiar with the features of our product and can vouch for it. So stay open a dialogue with your trusted advisors and CPA firms, and talk, ask some straightforward questions, and ask about specific functionality, and get their buy-in. Another aspect, I think, is this concept of being battle tested, and I put in here, and I mentioned in my introduction, I've been working in lease accounting since 2005, and really it's nothing new. Even the balance sheet treatment is largely something that we've been working with since the late 1970s when we started with FAS 13. We've had capital leases since then, and capital leases involve setting up an asset and a liability on the balance sheet and amortizing, and that's the same thing that we're doing now with a few tweaks. But the point is that many software solutions have just started. They don't have the experience in the leasing industry to really understand all the nuances of leasing. CoStar has been around. We've been working for over a decade with FAS 13, and then coming online with ASC 842. So there's a depth of experience there and knowledge that really can only come with years and years of working with leases and serving customers, both from a real estate perspective and an equipment leasing perspective. So just keep that in mind. And I think another key here is that make sure that the vendor is taking this seriously. They have CPAs on staff and accounting professionals who have experience doing the type of work. Have they lived through month-end close at a big corporation? Have they experienced the pain of not going home until the balance sheet ties out and you're reconciled? I think that's really important. It's something we take very seriously at CoStar. We have a team of folks who know exactly what that feels like, and we're ready to support you every step of the way. So I mentioned briefly real estate and equipment. Real estate is something that we've focused on for a long time in lease accounting. A lot of companies performed pretty accurate capital versus operating testing on their real estate leases because that's where the materiality was. And, frankly, a lot of equipment leases were inherently straight-lined. So it wasn't a big material impact, to keep robust records around equipment leases. And so most companies, or I'd say a lot of companies, chose to focus most of their efforts under ASC 840 on real estate. And largely auditors were okay with that because, again, equipment was inherently straight-lined. However, now that most leases, virtually every lease needs to be presented on the balance sheet, unless you have an exception regarding short-term or perhaps a materiality exception. Now we see this scrutiny on a lot of equipment leases that maybe weren't looked at closely before, and so they've been fragmented across the organization. And I'd say this is a really key concern to make sure that any solution, any software product that you select has robust capabilities around real estate and equipment. Equipment leases more frequently involve clauses around month-to-month or really end-of-term management, and then another thing that we see frequently with equipment is this idea, it's presented in ASC 842, but this idea of consolidating a group of leases into a portfolio and using the portfolio approach to account for a group of leases with one amortization table and one set of journal entries. And really, the FASB says that's fine as long as the answer you get is materially the same as reporting for each individual asset separately. And, we see clients proving that out pretty easily with a sample and auditors being perfectly fine with that. But again, we see that much more often in equipment than we do with the real estate portfolios. Something we touched on a little bit earlier in the question, the last question, but the audit trail is really important. You really have to make sure that the system you select can provide a report and have robust tracking of what has taken place in the system. Not just recording every keystroke, because that gets out of hand really quickly if you try to interpret that. But you really want something that you can show your auditors and prove out, for example, why conclusions were reached around finance versus operating tests and that kind of activity. We think that free upgrades are important, and that's a clear advantage of software as a service solutions or cloud solutions. want to make sure that you don't end up on the hook for a big bill in a year or two if you need to upgrade. And of course, CoStar is a cloud-based solution, and upgrades are included, and so saves some hassle there and some uncertainty in the future. We'll just keep it locked in. And here's the next slide gets into a little bit of a complex topic around the SOC audits. Now, this SOC stands for Statement of Controls, and so if you use a vendor that has input into your financial reporting, your auditor may ask you to provide a SOC audit from that vendor, and that just ensures that they can trust the controls that are in place at the vendor. Now, we have seen a little bit of misinformation, I guess I'd say, in the marketplace around what a SOC audit does and does not provide assurances about. I've seen a little bit of a few claims out there that the SOC audit verifies the complete accuracy of your results, and that an auditor will just be able to take that and run with it. There's no need to double check the software's results or the calculations because they have a SOC audit. And that's not exactly true. Now, there are some agreed upon procedures that can be performed as a part of a SOC audit, where basically a vendor can say, to the auditor, here is the data, and here's my system, and here's the results, here's the right answer. Go ahead and verify that this data, when run through my system, gives this correct answer. But really, all that proves is that in that one case, in a specific example, the software equaled what the vendor said it should. However, if you really look into the guidelines for auditors, financial reporting is always the responsibility of the company, and an auditor in an audit of the financial statements has a responsibility to verify those numbers in every case, and a SOC audit will not satisfy that. So just beware if you see claims out there. The SOC audit is important. It's regarding controls at the vendor. CoStar is happy to provide that, and but also just beware. Don't think that it means that you will never have your auditors need to verify any results from the system because they still need to verify that in each case. Okay, Jim, that brings up our final polling question.
Yeah, thanks, Matt, and thanks everybody for playing along with us at home today. We're going to show you one more question, and you will get this. Remind you, you'll get the continuing education credit for following along and getting a lot of experience from Matt's boots on the ground experiences too. I think a really valuable, helpful call today. So please answer this question: how does your organization plan to interact with auditors for ASC 842? Choose one of the following. We've discussed our project plan and policy with our auditors already. So you've been there, done that, at least on the front end. We plan to review our project plan and policy with our auditors, or we are getting accounting feedback from other internal, external sources, and we'll interact with auditors during the audit, or finally, we're not sure yet. So where do you stand on this plan to interact with auditors for ASC 842? Hit the submit button, and I'll show the results in just a second. And a last reminder, we will send you a link to a playback of this session too, so you can review all the things Matt talked about. And if he has any time at the end, he'll answer some questions or try to follow up with you offline if he can also. So I'm going to go ahead and close the poll. And okay, a lot of uncertainty out there. It looks like some folks have definitely got their feet in the water here on this. They know what they need to do, but a lot of folks are still collecting information, or they're not sure what's going on.
Yeah, that's really interesting. Yeah, pretty much across the board here, and I'd just say, on auditors, I think the best practice that I have seen as you walk down this path is understand the standard yourself, maybe get some advice from an outside source if needed, and then craft some policies for your company that make sense for you, and then take it to the auditors. I see that being kind of the right order, because if you go to the auditors up front, before you do anything, they may have influence in some areas that you'd rather not. But if you go to them with a reasonable policy and say, we've thought this through, maybe we've even consulted with a consulting firm about it, is this okay with you? I see that really going pretty smoothly as a flow of the process of talking with auditors. Okay, another key essential regarding software is the integration aspect. So, a lot of talk now. If you go to an accounting conference, you're almost certainly to hear some discussion of artificial intelligence, robotic process automation. You hear the term continuous close thrown around. Certainly, for years now, we've been trying to shorten month-end close, move more activities into pre-close, et cetera. And I think integrations, making sure that your software can handle integrations, is key. Now, just a few closing remarks here as we roll into our a few questions. I want to make sure, as promised, that you guys know where to find white papers that we have published, and you can see 2 on the screen now: 12-step guide, and then also the lessons learned white paper. And both of these include really different perspectives, but a lot of good information. The 12-step guide will have a lot of those lists that I talked about earlier. And then lessons learned will have a lot of the material that we went over today, and just even more robust and packed with information than we had time for today. And as I get into questions, let me just give you my contact info here, and just let everybody know that I'm also available on LinkedIn. You can search for me there. Matt Waters, CPA. Feel free to connect with me and start a conversation on LinkedIn or over email. Always happy to talk about lease accounting. So now let me just pull up our first question. We've got a couple minutes here, and I'll also get any questions that we don't have time for, and then we'll respond via email. But the first one is, how are tools like CoStar handling consolidated financial reporting? Has this been a challenge? Yeah, so I'd say consolidated financial reporting is really a big issue for large companies, right? You may have many business units or divisions or even companies, sometimes in varying geographies with even varying currencies. So yes, it's very key. CoStar, we've handled that through a hierarchy process, and it's part of the design phase. When we first set up your system, we'll discover, we'll have discovery sessions with you, and we have experts in the design process that'll build your hierarchy, and that's really the key. And yes, we have heard this being a challenge in other places, and it's actually one of the main reasons why we replace other systems. Is that this is not something that's standard throughout the software industry. CoStar has a really robust hierarchy and facilitates this consolidation process, even with various entities in your organization. So just let us know if we can help more on that. Let's see, maybe one more what are the major challenges you have seen with equipment? Probably just the policy decision around the portfolio approach versus the asset level accounting is a big one, and that's something to start thinking about now, even as you review other requirements. So, Jim, I think that's probably about all the time we have for now.
Yeah, I think we're going to have to wrap it up here, but we did get a lot of questions. So, Matt, I think that just makes the point that you gave us a great presentation today with a lot of hands-on experience from your experience at Home Depot and American Tower. So thanks to you, Matt Waters, MBA CPA, Director of Lease Accounting at CoStar. There's his info on the screen. You can contact him. He mentioned LinkedIn, too, and he's offered to follow up with you on more of these many, many questions we got. Thanks to the audience, too, today for sticking with us. Appreciate your answering the questions. Helps us understand what's going on. And with that, we're going to wrap things up. We'll send you a link to the presentation as soon as we have it. I'm Jim Erickson, and thanks again to you and to Matt. And with that, I'm going to say so long, everybody. Have a great week.